Hello everybody, welcome to the webinar this evening. We're going to get started at this time. My name's Troy, I'm a Senior Account Manager with AvaTrade, and I'll be leading the webinar this evening. As you can see on the screen, we're going to have a crypto focus today. I know the title was Technical Analysis. That goes right in line with crypto trading. It's very heavily focused on technical analysis, and so we'll be applying some technical analysis techniques to some of the cryptocurrency brands that are on the platform. Before we get started, I just want to do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing the screen okay. All right, great. Looks like we're good to go. Let me just type a quick message in case someone forgot to turn their audio on. They would have no idea we were communicating yet. Okay, so as we get started, we always need to cover the idea that any investments have risk, and that would include obviously trading on cryptocurrencies or any of the CFDs with the Forex style trading or spread betting or options trading. All of these types of investments carry risks, as do many other investment types in the world. But obviously, they also carry the ability to make substantial profits, which is why we're all here and trying to master some ideas and strategies to hopefully bring consistent profits as you move forward. Please don't take what we cover today as financial advisement. I'm not a licensed broker personally or a financial advisor, but I do have a lot of experience working with literally thousands of clients through the years, looking at different ideas in terms of strategy and indicators and charts and this sort of thing. I've seen a lot of what works well and a lot of what doesn't work as well also. So we'll cover some ideas as we go forward regarding risk management a bit, and you could apply some of those ideas if you wish. But we should be looking at this as an educational perspective, an informational webinar that you certainly could apply if you see fit to your live trading. Okay, as we move forward, we're going to cover some basic things within the slideshow to kind of familiarize you all with the idea of what are cryptocurrencies. Sometimes people are trading on them and they don't really understand what they are or how secure are they, can they be trusted, all of these sorts of things, because it's kind of a new idea to have a currency that you can't put in your wallet and fold up to get your hands actually on. And then to trade on something like that, maybe you have some apprehension. And so I think it's important that we, with part of the time today, before we get on the live charts and look at some strategy ideas with technical analysis, it's probably important we cover some basics about what is cryptocurrency and this idea of blockchain technology and some of the other points that are listed there. And once we get through that, then we'll get to the live charts. Before we get started, I'm curious, type yes if you've done any trading on cryptocurrencies, or no if you have not. Okay, looks like a mixed bag, more no's than yes. Some of you, I see you say you've done quite a lot of trading on cryptos. Maybe we're about 50-50 in the crowd. Okay, so listen, one thing to keep in mind about cryptocurrencies in general is it's not like your typical currency that's based on jobs reports and earnings numbers and all of these sorts of things that other assets have tied to them. You don't have, like the USD last week had the non-farm payroll report come out, or what amount did the earnings go up for the country that the currency is from. You don't have this aspect with cryptocurrencies in general. Now they are paired against the USD, so you can take a look at what's happening in the USD, but other currency pairings have two economies that you look at, like Euro USD or Euro GBP and so on. So cryptocurrencies are a little bit different in that regard, because you rely maybe a little bit less on fundamental news and more on the technical analysis. But let's go ahead, let's talk a little bit about the specifics of the technology behind cryptocurrencies. It's something known as blockchain technology. A blockchain is basically a constantly growing digital ledger that details the transactions that occur as people buy and sell things with cryptocurrencies. And so it's something that can be accessed and checked. It's always there, and it holds all the details of all the transactions that have occurred between different owners of cryptocurrencies. Now, this doesn't have anything to do directly with your trading, but understanding this technology can help you to have maybe more faith in trading on these different brands that use this technology. And so these blocks, as they call them, are secured and fastened to each other through what they call cryptography. Okay, this is the science of cryptocurrencies, cryptography. And so basically it's a type of digital encryption that creates a computer code in a way that makes people who are trying to maybe hack into the system, makes it impossible for them to do so. All right, at least as far as we know, right? And so as we've seen other types of technologies and computer codes be able to be hacked, the way that these blockchain units link together, it creates a situation where you're just not able to do so. And so this cryptography, this blockchain facet of cryptography is what makes cryptocurrencies so secure and reliable. And we can kind of talk a little bit about how is it set up. There's no central location. There's no one server for a cryptocurrency. All of the people participating and owning the cryptocurrency are connected to each other, and they call these peers. And each of these peers, each of the computers of those who participate in the exchange, store some of the information, and it's all connected to each other. And all of these transactions are able to communicate with each other in a decentralized way, again, adding to the security of the system, as you can't just hack one server or something to cause a problem with this type of technology. And so the decentralized network is a very important aspect of this blockchain technology as well. And so this is just kind of a diagram showing that there's a ledger, okay, that stores all of the information, and it's a digital ledger connected to every one of the peers. And every transaction checks with all of the other peers in the blockchain to make sure it's secure before adding another link to the chain. And so, and this can be checked at any time to go back and check if a transaction occurred or not. And so you can't really lie about a transaction because the information is locked in the blockchain. And so this is all of what makes this technology very secure, and that's why people are starting to use it more and more. And not just with cryptocurrencies, but let's talk a bit about the cryptocurrencies and why it's an advantage to trade with the style of cryptocurrencies that are on our platform. CFD trading allows you to trade maybe with a larger amount than you could because of leverage. Uh, there's no expiry date, unlike trading on futures. There's no stamp duty. Let me ask, have any of you ever bought actual coins from an exchange? Okay, and so some of you, yes, some of you no, or you're not sure exactly what I'm saying. Some of you may have mined them, generated them. Okay, Jeff, that's interesting. Which takes a lot of energy. There's a certain amount of energy required to mine a Bitcoin or any other type of cryptocurrency, and that's what creates the value. And so it's a very interesting process, the mining of coins. And so, anyways, back to my point. If you buy, those of you that bought actual coins, there were probably fees, right? Stamp duties of some kind, commissions when you want to buy or if you want to get rid of them. And let me ask, if you're holding the coin, if you bought the actual coin, is there any way to profit while it's dropping? Think about it. You're holding the coin. You're hoping the value goes up. That's the only way you're going to profit. CFD style, you can short it without having to pay stamp duties to buy it and then find someone else to sell it to. You can easily make profits on cryptocurrencies, whether the price is going up or the price is going down. A lot of folks, let's use Bitcoin as an example. When the value went up to 20,000 a coin, a lot of folks held on to it. Imagine if they could have shorted it without worrying about having to actually sell the coin and not own it anymore. Imagine if they could have shorted it and maybe just put a stop loss above in case it climbed more that it got out of the short. Think how much money with a trailing stop even of a certain distance, how much money they could have made in bits as it shot down 2,000-3,000 points in one day at a time. And so this is the advantage of CFD trading when it comes to cryptocurrencies rather than actually buying and holding the coin. So it's the interesting aspect that you can profit in both directions, which is the same with any other asset when it comes to CFD trading. And so also the markets are available 24 hours a day, right? If you want to buy or sell a coin, you may have to wait until the right hours when the exchange is active or when the business hours are of the exchange for buying or selling your coin. So it's a lot more fluid. It's a lot easier access to shorting and being able to buy cryptocurrencies, and you have leverage to be able to allow you to go with a larger amount and then potentially go after larger profits. So a lot of advantages to the CFD style rather than actually purchasing the coin. Now, it's probably important to understand some of the latest headlines in the crypto markets before you're trading. And again, I'm trying to help you understand that this technology really is very secure in terms of trusting that these cryptocurrencies won't get broken into. David, yeah, I understand a lot of the exchanges now are 24 hours a day, so that lends some of that advantage to the actual buying and selling of the actual coin. I can understand that. Okay, so this is interesting. The Stock Exchange of Thailand. They applied for a license from the government to operate an exchange solely for digital crypto assets. So some legitimate entities now are wanting to get into actually having a legitimate license to buy and sell, to create an exchange for buying and selling cryptos. So it's an interesting development. Thailand also is applying blockchain technology to the voting process. So you think about the aspect that we talked about, the blockchain technology itself, that it's very secure, it can't be hacked into, it creates a digital ledger that can be read back at any time. All of this lends great security to something like voting. It's almost like a perfect technology for it. And so you can start to see that more and more the technology behind cryptocurrencies is becoming mainstream. It's becoming understood more so by the both government entities and private entities, and making use of the technology because of its security has become more commonplace. And so Thailand's not the only place also considering using or already using blockchain technology when it comes to voting. West Virginia, which is a state in the United States, is doing a trial of mobile blockchain for overseas armed service members to be able to vote. So they're understanding the security of this technology, and it's being demonstrated in different ways. And some other cities listed here as well that also are conducting trials of voting with blockchain technology. And as we go forward, we can see beyond governments using it for voting, some private companies are starting to use it for issuing stock. We can see here this company's launching an exchange for tokenized stocks using the Ethereum technology, the Ethereum blockchain technology. And so companies, private companies using this to issue stock is an interesting development as well. And so you start to see here's some others that are doing the same thing. Chevron and Total, along with major Indian refiner Reliance Industries, have announced joining the London-based blockchain platform. And so private companies, government entities, starting to become commonplace to use this type of technology. And so it's very interesting, and you can Google search a lot of this and read up and see that the reliability of this technology is really being bought into by many groups and entities. And so let's actually take a look at the charts now that we have a little better understanding, I hope, of the technology behind cryptocurrencies. And let's see what kind of movements we have going on. And now I talked about something interesting, an important point to understand when we first got started. You know, these cryptocurrencies are paired a lot of times against the USD, right? Or whatever currency it might be paired against. As we scroll down here, we can see that we've got some cryptocurrencies down here paired against the yen and the euro, okay, Bitcoin yen, Bitcoin euro. So whatever currency is involved, it would make sense to pay attention to what's happening in that country, because there is some obvious connection between how the cryptocurrency value will move and the value of the currency that it's paired against. Okay, so what kind of analysis is that called? Not on the chart, but when we're looking at the news or economic reports that might affect the movement of an asset. Rather than just technical analysis, what kind of analysis am I talking about? Yeah, fundamentals, exactly, Andrew. Fundamental analysis. So what we might look at is, if we're, for example, going to focus on, let's look up here and focus on Bitcoin USD. Okay, so then we should look at, well, what's happening with the USD? And so if we take a look at, let's say, Forex Factory, now this is a low-level announcement that came in today, but it's still showing a trend in the US. Factory orders down, lower than expected, negative 0.6 instead of an increase of 0.3. That doesn't help necessarily the view for the strength of the US dollar. And then if we look back last week, anyone know what was the announcement last Friday? It's once a month for the USD. The non-farm payroll, hopefully you all have heard of that. It's a very big announcement. Yeah, the NFP, you guys are on it. And you might think, well, look at these jobs. They expected 165,000 and it came in at 304,000. And then you know what happened? The USD dropped after that. And you'd think, whoa, better than expected jobs by a huge number created, and the value of the USD dropped. Well, you can see that that's not the only announcement on the USD that occurred that day, last Friday. Of these numbers, there's less worry about the unemployment rate rising from 3.9 to 4%. A lot of that had to do with the government shutdown. A lot of folks were temporarily unemployed, and so they applied for unemployment benefits, government workers that were furloughed. And so that's understood that this ticked up. Obviously, this was great job creation, so not much worry about the unemployment rate ticking up one little notch. But the big number here were the hourly earnings. Okay, this is a sign of not enough inflation in terms of people's ability to pay higher prices for anything when their pay only rises by 0.1% for the prior month. And so going into that announcement, if you were paying attention to what some of the experts were saying, they were saying that they were focused more on the hourly earnings than they were the job creation. Not that the job creation isn't important, but they were focused largely on were people's pay levels going up. And this number was viewed as really bad. And so that paired with the fact that earlier in the week, the FOMC committee met. And does anyone understand what the word dovish means? If the FOMC committee is a committee in the US that decides monetary policy and interest rate decisions, whether to raise interest rates or not. When they spoke this last week, they spoke in a dovish fashion. It's the opposite of hawkish. What does that mean if the FOMC spoke dovishly? Yeah, it creates a bearish environment. Basically, the FOMC was saying that they're going to be very cautious with interest rate increases. They may not raise interest rates at all this year, depending on the market conditions. It'll be market dependent. We're not in any hurry to raise interest rates, that sort of thing. Okay, that's what they basically were saying. And if you don't understand the relationship between interest rate increases and the value of a currency, in general, if interest rates go up, the value of the currency rises. If interest rates go down, the value of the currency tends to drop. Okay, and the expectation prior to this year, at the end of last year, and the FOMC was talking about this themselves, was at least 2 interest rate increases this year. Now they've reversed course and they're saying, well, maybe none, depending on the market, right? And so the value of the USD responded, the markets responded to that, and the USD dropped quite a bit in terms of the value of the currency versus other currencies like the USD Canadian. Oil was ticking up, so the Canadian really pulled the USD down that day, maybe 40, 50 pips, something like that in a pretty short period of time. And so all of this you need to take into account if you're going to trade on cryptocurrencies that are paired against the USD. So in general, there's kind of the view this year that maybe the USD could weaken against other currencies because the Fed is being what they're calling dovish. Okay, the FOMC committee in the US is being dovish right now. Doesn't mean they couldn't change course again, but this is where they're at now. And then on top of it, these wage numbers came in, 0.1%. Okay, so with the FOMC being dovish earlier in the week, and then this happened Friday with the earnings number, and that's when we saw the big drop in the USD versus currencies like the Canadian. Okay, and so now let's move back forward to today. And what did we see? Some weak numbers come in here. It's a low-level announcement, but factory orders down for the USD. Okay. Now there were some earnings numbers that came in that got people excited, and the USD actually strengthened today. If we take a look at the USD, let's say, versus the Canadian again. Okay, we see the USD climbed. We're looking at 30-minute candles, and we see the USD climbed back up quite a bit today. Okay, so it had a recovery back up, but now it's reached, here was the ceiling for a while, the resistance point. And so it's neared this drop-off area here. Okay, so it's between this area here where there was resistance and support, and it broke the support and crashed down. Now it's stuck between, and it seems to be trending back to testing this support again. Probably people are just getting over the excitement of some of the earnings reports, and we see the value of the USD dropping back down again, with the bigger picture view for the year from the FOMC being more dovish. Okay. Now, the China situation, things like that, you want to stay abreast to that, because the China-US negotiations, if they have some big breakthrough, then you could see potentially the USD respond to that. But in the current environment, it looks like the excitement over some of the earnings kind of died off. We reached this resistance area, and the USD, the high point, seems to be trending back down again on the 30-minute candles and testing the support that you see here. It even broke it and went back up. Now it seems to be working maybe back towards the support. So we're potentially catching a high point with the USD, okay, and have dovishness out there, bearish sentiment maybe still for the USD. So this is kind of an overview of some of the fundamental news. And if we look at some other currencies, USD, JPY, we see a big run up today with the USD against the JPY and a correction starting back down. So the same idea, the same trend showing on some different pairings with the USD. So now when we go to Bitcoin, we can start our technical analysis now a little bit smarter. Okay. So now we're just going to move into, if we wanted to take a position on Bitcoin, understanding that the USD has some overall bearish sentiment from the FOMC and from the earnings numbers, the wage numbers, I should say, that came in last Friday, to keep that in mind. Okay, so what we see here then, if we're looking at, let's go to 1 hour candles. We see a potential line of resistance on the 1 hour candles, maybe in this area here. And we see an area of potential support in this area down here. Okay, so it's come down, bounced back up. It's bounced down from this level. It's hit, come back up. Now it's heading back towards this upper level. Let me ask, if you think that the USD in the bigger picture could weaken some more, where might you put a pending order in this situation? And there are different types of pending orders you could use based on this type of setup. Yeah, David, you're saying a buy stop above the resistance. So you'd be waiting on a breakthrough, a breakout candle. Okay, so David's suggestion is, if I draw another line right about here, okay, if this comes up and breaks through here and gets as high as this mark, you might say this resistance has been broken. Okay, and so where's our next level of resistance that you see on with the technical analysis? Where do we see a level where it's hitting and dropping, hitting and dropping? I can pick it out pretty easily right about here. Okay, we see it hit here and dropped. It hit again and dropped. It went through temporarily and came right back down and dropped. Okay, so if we have a breakthrough here, what might be a logical spot to potentially take your profit? Because it's important, not just your entry point for when you get into the trade, but having a logical spot to take your profit. David, you're saying 34.50, and that would make sense to me. You're taking it just before the resistance, right? Why would you take it before the resistance and not right at the resistance? Playing it safe. Exactly, Jeff, you're on it. So if you try and be too perfect, you could miss the movement. I mean, look, these didn't reverse from the exact same spot. This one broke through a little bit. This one stopped just short. This one broke through a little further. Okay, so you draw a best fit line for these data points, and then you try and take your profit just before it reaches that area to try and be more sure that you won't miss the movement. because it could come back down on you. Okay, sometimes I look at maybe just trying to go 75% of the distance. And then that maybe is more likely that you'll take the profit before another reversal comes than if you try and go 90% of the distance. Okay, the more you try and push it, the more likely it is you could miss that movement before it comes back down. Okay, now, so you'd have your take profit here, your get in point here for a breakout this way. Even though it's bearish right now for the USD in terms of the sentiment because of the FOMC statement and because of those earnings numbers in the US, the wages not rising as much as expected. Could you prepare the opposite move down here? Prepare a breakout in both directions? Is there any reason why you couldn't? If it breaks this support, okay, it could likely run quite a ways to the next support level, which I see as being maybe somewhere right about here. Okay, so you certainly could. Yeah, David, exactly. So you could set up, what kind of pending order then is that? If the buy stop is the breakthrough at the top and you're taking your profit up here, then the breakthrough at the bottom, if it breaks through here, you're taking a sell stop. Correct. That's exactly what that would be. It would be a sell stop. And so let's go ahead. Let's walk through this, and for those of you that might not be familiar with pending orders. So let's say because of the news, you'd prefer to take a shot at the breakthrough on the top because maybe it's more likely you get a false signal like this one where it dipped down, trigger your sell, and then it comes back up and hits your stop loss and you take a loss. Okay, because we've got fundamental news maybe on the side of the cryptocurrency and against the USD. So then maybe you say, okay, maybe my odds are better to prepare the breakout at the top and not the bottom. And that might make sense. So, okay, so then we click on the asset and we want to change from market execution. If you don't want to take the position now, and you certainly could take it now, if you say, heck, I think it's going to rise anyways without breaking through, even before the breakthrough, if you wanted to take a buy, you certainly could take a market buy now or a sell if that's what you wanted to do, right? And so obviously you could take the market position. If you were intent on waiting to confirm a breakthrough, like we were going over, then you go back and you switch the type to pending order. And then the type of pending order is the buy stop if we're waiting to trade up from a higher point. Okay, those are the stop orders. The stop orders are continuation movements. Buy stop is you're buying from a higher point because you think it'll keep going if it goes up that far. Sell stop, you're selling from a lower point because if it goes down, you think it'll keep going down. So they're continuation movements. The limit orders are the reversals. Okay. And if anyone has any questions on that, I'd be happy to review the different pending order types again. Feel free to stop me if I'm going too fast. So buy stop. And if our entry point then is 3419.99, I might as well say 3420. So my at price then, 3420. And my take profit, we said 3450. And my stop loss, where should I put my stop loss if I want to use one? What would make sense? What would make sense if I'm getting in after it breaks through the support? If it breaks the support and we truly have a breakout, should it break back below the support? Okay, David, I got you. It does depend on your risk tolerance. Some people trade without a stop loss at all. You could trade with a hedge position prepared down below it if the first pending order activates. you have some options. Let's walk through the scenario of if you were going to use a stop loss. So it might make sense, as David suggested, that you could put your stop loss back just below the support, because if it broke through, there must have been good news for the cryptocurrency or bad news for the USD, whichever the case may be. And so that news should keep it from breaking back below the support, in theory, right? So if our stop loss is back below the support, let's say down at 3408.8, something like that, or 34087, 3408.7, okay, that's this line here. So my risk is from here to here, and my potential profit is from here all the way up to here. So about 30 points potential profit and a risk of much less. Okay, a risk of about, let's see, we're going at price 34.20, stop loss 34.08. So we're risking about 12 points, a little less than that, to gain about 30 points. Okay, so we can be right in a setup like this only 50% of the time and still have a nice profit, right? So you don't have to have a high win percentage, 65%, 75% to make a nice profit, because you can set it up to where your take profit is further along than what you're risking. Now, you don't always have to set it up that way. You can do the opposite, which allows you to stay with the position longer, and you're more likely to reach the take profit mark. But this is one way to set things up to limit the risk and have it smaller than the potential profit. Okay. Any questions on this setup? Any question on the setup? Volume. Okay, good question. We should talk about that. So if you were going to take this position, you have to know, okay, well, what size position can I afford, right? If I'm risking 15 points to my stop loss and I do one full lot, right? That's 10 Bitcoin. So one full lot is 10 Bitcoin. So that's $10 per point. So if the chart goes 15 the wrong way and hits my stop loss, then I lose 15 times 10 if I did one full lot, because I'd have 10 Bitcoin. So that would be, you'd be risking 150. For what potential profit? If the take profit is 30 points up, you have a potential profit of 300. So you're risking 150 for potential profit of 300. Okay, in that example, with that trade size. So if you'd like to be able to make $10 per point, then you need to take a position size of one lot. Now, what balance do you need to have to be able to trade like that? Let's take a look. I don't know if any of you have looked before on our website at the trading info page. If we go to trading info and trading conditions, now different areas of the world have different leverages, right? And in the EU and UK, for example, there are two options for leverage depending on what you qualify for. So let's talk about the retail leverage in this example, because most people in the EU and UK are on retail leverage. Those of you that have a higher leverage, we can work the math for that as well. So if we go to cryptocurrencies and we look at the leverage here, we're looking at 20 to 1 leverage. This is what we'd call the pro leverage. And so the leverage for a non-pro account would be lower than that. Let me see, let me make sure I'm on an EU site. We've got different servers going on. Yeah, it says EU. Okay, so let's make sure we've got what we need to look at here. There we are. So now we see leverage pro and leverage retail. So if you have a pro account, or if you're in Australia, South Africa, other areas that have the higher leverage, you're looking at leverage of 20 to 1 or 25 to 1. Let's make sure we're looking at the right cryptocurrency. Bitcoin USD is what we've been looking at. So 25 to 1 with pro, only 2 to 1 leverage with retail. So let's look at both of these examples and make sure you understand. Yeah, I understand, David, your frustration with the new regulations. It basically requires you to take smaller trades or have a larger balance in order to be able to take the positions. It doesn't make you risk anything more. You just have to have more towards margin. So if you can get the balance in there, then you can risk the same amount per trade size on the per point risk, but you just have to have enough to put into margin to open the positions. So let's look at 2 to 1 and 25 to 1 with the leverage and make sure you understand what would be appropriate maybe for your balance. So if it's 2 to 1 and we're taking 10 positions, and let's say the price is 34.20 when we take it, what's the position size? If one Bitcoin is, let's make it easy, 3,400, and we have 10 of them in the position, then what's our position size? If one lot is 10 Bitcoin and one Bitcoin is at the price of 3,400, that's 3,400 times 10, right, for one lot. So it would be 34,000, right? The position size would be 34,000 if we did one lot at the price of 3,400. So if you need to put 1 to 2 is the leverage we looked at, right? 2 to 1, so 50% with the retail leverage, then how much would you have to put the margin? If your position size is 34,000 and you have to put 15 or 50%, that's 17,000, right? Half of it. So you'd have to have an account that has like 20,000 in it, right? To trade one full lot of Bitcoin. In order to trade with this trade size, and then you need enough to cover. And this is the part that's interesting. You're only risking 10 times 15, 150, but you need to have 17,000 to margin. So you see what goes to margin is not necessarily what you're risking. Your risk management determines how much you're risking. The margin is just collateral to be able to open the position. Okay. So, and sometimes people get confused. They think they're risking what goes to margin, and you don't have to be. Not by a long shot necessarily. Any questions so far on how that's calculated? Okay, so what if you had the pro leverage? 25 to 1. Okay, so instead of half of 34,000, you divide 34,000 by 25, right? So it would be a lot smaller number. That's the point here, is it would be a lot smaller number. When we take 34,000, and I'm just doing the math right now, and divide it by 25, we come up with 1,360. Okay, so if you have the pro leverage or the leverage found in some other countries that are outside of the EU, UK jurisdiction, then you're only having to put, for the same size position, one full lot, about 1,360 USD to margin. So you could have an account, instead of 20,000 needed to trade on one lot of Bitcoin, you could have an account of just a few thousand and be able to open the position and risk manage it. Okay, so this is the idea of understanding what leverages you have, what assets you're going to trade on, because not every asset has the same leverage. If we look on that same page, you'll see the FX is maybe 30 to 1 instead of 2 to 1 for the retail, and 400 to 1 for the pro. And stocks and indices have their own leverages. So make sure what you're going to trade on, you understand the margin percentage requirement, which is determined by the leverage. Okay, leverage of 2 to 1, 50%. Leverage of 10 to 1, 10% margin requirement, etc. So the leverage directly determines the margin percentage that has to go up. And so with the cryptocurrencies, you should have a larger balance because the leverages in general, whether you have the pro leverages or the retail, the leverages are lower for cryptocurrencies than compared to other assets. So if you're not used to trading cryptocurrency, you could get in over your head if you don't pay attention to the fact that in comparison to other assets under both leverage systems, the leverages are lower on cryptocurrencies. Does anyone know why that would be? Why in general, and AvaTrade's not the only broker that has the leverages lower on cryptocurrencies. Traditionally, what have the cryptocurrencies been like in terms of volatility? Yeah, more risk, more volatile. Now, in the past months, they've calmed down a lot. They've become more predictable, which is why we're doing this webinar series now. The cryptocurrencies, back when Bitcoin was running up to 15,000, 20,000, you'd see on a daily basis 1,000-point swings up and down and all over the place. And that sort of movement, while you can still get decent movements to make a nice profit with cryptocurrencies, which is the nice aspect of it, there's enough volatility still. They tend to be more predictable in terms of the volatility now. The technical analysis, like what we're looking at with the price levels, with the support and resistance levels, tend to work quite a bit now and be a bit more predictable. And so it's not a bad time to get in and start trading on cryptocurrencies as they've seemed to become more stable and more predictable in many ways. Okay, but yeah, that's the answer. That's why the leverages have been lower, is to protect both the traders and the company, because the volatility was just huge. And you understand companies need to have risk management as well. They need traders trading in both directions, or companies need to hedge outside if the trading is loaded in one direction. And so not only do individual traders need the risk managed, but so do brokers, right? And so in the end, the leverages are based on volatility of assets a lot of the time. And so that's where we're at with cryptocurrencies. Maybe someday we'll see the leverages raised, okay, higher than what they are. All right, so any questions at this point before we move on? Okay, so why don't we take a look maybe at another, and let me get rid of that. The movement moved too close to my entry point. I would need to move my pending order a little bit. And you all need to pay attention to that. You see, when I was going to go ahead and close that pending order, I waited too long. It got too close to my entry. You need to be a certain number of points away, your entry point on a pending order, from the current market price. So it's something to pay attention to. If that pops up, you'll see that it's giving you that notice. And now that this dipped back down, I probably could go ahead and place that. But that's something to be aware of as well. So let's look at maybe Ethereum and see what's going on there. If we're looking at 1 hour candles, we're seeing kind of a tightening of the movement. And what I mean by tightening is, the low points here are getting higher and the high points are getting lower. And it's just kind of tightening here. And you could expect maybe a breakout in one direction or another. Okay, it's hitting the slope and dropping, hit the slope and dropping. It's getting near the slope. We could have a breakout and you could have a run, or you could have a breakout on the bottom of the slope and have a run this way. Now, we already talked about, Ethereum is paired against the USD as well. So you take your pick if you're going to trade on this. I didn't see a good support and resistance level, so I'm using this channel method where you see a narrowing of the movement. And typically when that happens, eventually there's a breakout from that narrowing, because it can only get so tight. And then a decision has to happen. It either breaks this downward slope or it breaks the upward slope. And when it does, a lot of times you get a big run, okay, one way or another. Not always, but a lot of times you see that. And so, again, you could go with a pending order as a buy stop up here. If it breaks through this channel, you could go with a pending order as a sell stop if it breaks below this channel. That could be an option here. And you don't have to trade just because you're looking at it. If you like the setup on Bitcoin better than Ethereum, then you trade with Bitcoin, right? You should look through all of the assets and have a look. Let's look at Ripple. On the 1 hour candles, what I see is a nice support level here. Okay, it used to be resistance here. Once it broke below back here, it was resistance once, was holding, and then look at the breakthrough. This is a prime example of a breakthrough. Okay, if you had your pending, what kind of pending order should you have had above this resistance line that was established? Right about here. Same as what we showed before, a buy stop. Correct, Jeff. So a buy stop above this resistance that was established would have been great timing. It breaks through, you have your stop loss on the underside for a small risk, and look at that huge potential profit. Huge rise. You get a lot of this with cryptocurrency, and you can see the predictability of it. Now look, it was also predictable when a resistance line is broken, what does it then usually become? Those of you that are familiar with this idea of support and resistance, yeah, David, it becomes support. A broken resistance, think about it logically. If something caused the resistance to get broken and that something still exists, then it should be the same idea as to why it would stay above that resistance now. So that resistance should become support. And look, this is a prime example, a breakthrough, and then the resistance becoming support. Look, it hit and back up. You could have had, this is a good example. Let me test you. So let's say you profited on the breakthrough here with your buy stop. What kind of pending order would I have just above the new support now so that if it comes down here, I buy? What's that called? Pending order. This is a reversal. If it comes down, then I want to buy. I want to buy from a lower point because I think it'll reverse if it gets near the support. So if it was up here, headed towards the support, param, correct? Or no, not correct. David, you've got it. Jane, you've got it. Buy limit. Buy limit. Always go with the first word. Whether you're wanting to buy or sell, it has to make sense. So if it's getting near the support and you're wanting to buy, then it has to be a buy something. And always remember the limit orders are the reversals. Okay, limit orders are reversals. So if you're wanting to buy from down here as it's dropping, then you're saying, I think it's going to reverse when it gets down to my entry point. So that's a buy limit. The limit orders are reversals. So if your buy limit was down here at the same spot that your buy stop was when it broke through and you entered as a buy, now you have a buy limit for the same reason. It's getting near that support now. Look, you profit again. And what if you did it again? Even though the movement narrowed, you'd have profited again. Right near the support, it pops back up. It's hovering. Okay, so it's looking like the movement's narrowing again. Why did it narrow? Well, the USD strengthened a bit today. We looked at that on the chart, right? We're looking at 1 hour candles. This is today. All of these hours, this is today. The USD strengthened, and look, it barely pulled Ripple down. It barely pulled it down, right? So if the USD is going to correct and weaken again, then which way would you expect this movement to go? If the FOMC created a bearish environment for the USD, you say hopefully up. Well, hopefully if you took a buy position, right? Do you have to just take a buy position? Couldn't you do both? Couldn't you do a market buy now with your stop loss below the support? And what kind of order then would we have below the support to start at the exact same spot that your stop loss closes your buy? A sell stop. Okay? That's a 1-2 type move. A market move, backed up by a pending order. Okay, and your pending order could be two options. Let's talk about hedging a little bit before we run out of time. And we are almost out of time. If you take a buy and you don't want to put a stop loss because you think it might dip down and then go back up. So we could put a hedge, couldn't we? What's a hedge? Anybody? If I don't want to put a stop loss because I'm afraid that it could break the support and then go up because the USD was strengthening a bit, but I think overall it'll weaken. So I like the upward move better maybe, but I think it could break the support temporarily. So someone's saying a locked position. I'm not sure what that terminology exactly means, but let me explain what I mean about the hedge. So if it gets to, let's say, this point, and you say, okay, that's where I would have my stop loss because I think it broke the support if it gets to there. But then you're thinking, boy, I'd rather stick with it because I really think the USD in the bigger picture is going to weaken. So instead of doing a stop loss and taking the loss and then it shoots back up, right, which can happen more often than you like, at this point here, you put a sell position, a sell stop for the same size as your buy position. Only the sell stop has the stop loss and not your initial position. Okay, so and by the way, when you take the opposite position for the same size, there's no new margin requirement. Don't have to put anything more to margin. As long as you're above, as long as you have any free margin, above 100% margin level, if you have something in free margin, then then the hedge position will open, the pending order will open without any margin requirement. Okay, so just make sure you have enough in your balance that you don't drop below 100% margin level. If that happens, then you can't hedge. You can't open any new position for that matter. Okay, so if it drops to here, instead of having a stop loss on your buy, you could have a sell position, a sell stop for the same size trade, and the stop loss is on the sell position, that if it comes back above, back to this starting position of your buy, then your sell stop is closed. And now your buy position is still active and can profit. So that covers you. If it keeps dropping, you could take a profit on the hedge at the next support level, like down here, right? You could take a profit on the hedge and you didn't lose much. Even though the buy is in the hole, you didn't lose much. And you could have another hedge prepared below this support. So if it doesn't bounce back up off this support, you have another hedge to back it up. So what happens if it triggers your hedge, it comes down here, you take the profit on the hedge, then it comes only halfway back up. Are you in profit? Even if the initial position is losing still, you'd be in overall profit. Yeah, not just technically, David, you would be in profit. If you're only in the hole, the distance from your entry on your market buy to the entry on your sell stop, and then you come down all the way to here, you're profiting on the sell stop, you take the profit, as long as it comes up the distance that you, between your market buy and your hedge, if it comes up that far, you're breaking even. If it comes back even to your starting spot, you're way ahead, right? You're way ahead at that point. So if it keeps dropping and you keep hedging, you have to think probably at some point it will rebound back up. And if you've covered, let's say 75% of your loss on the buy position with your hedge trades, okay, you can't be perfect, you can't cover all of it. There's some distance between the two entry points, but you can cover most of it. And then eventually, if it even comes halfway back up, you could be an overall profit. This technique is if you believe, let's say in this example, that it will go up eventually. If you believe in that more, then you don't put the stop loss on it. You put a hedge, and the stop loss is on the hedge if it breaks back up. And that's if you're more certain in one direction than another. That setup makes sense. If you're not so certain, then you could just put your stop loss and be done with it. If it hits your stop loss, you're out. Okay, but you do run the risk of the false drop where it hits and then goes up, and you hit your stop loss, and you wish you would have hedged it instead, right? So those are options for you. I've seen hedging work very, very well for many traders to avoid false signals and hitting your stop loss and then missing a big run. Any questions on this idea of stop loss versus hedging? If anyone has any questions on that, or type OK if you understand. And you may practice a little on a demo with hedging before you do it if you haven't done it before in a live account to get an idea of how wide to make the strike zone, the distance between your market move and your pending order. Someone's saying they came in late. Is it possible for a link to this webinar? Yeah, listen, the webinars are being recorded now. In the past, they weren't. I've got the system set up to where we're doing that now. So eventually, you'll receive some information on how to access the recorded webinars. They are going to be made available maybe on one of our social media pages or maybe on our website. That's in the works, and these webinars will eventually be available. Good question, Mitchell. Yeah, listen, Mitchell, we cover a lot of similar ideas with other assets as well, not just with the webinar here on cryptocurrencies. So come back. We have webinars each week, a couple times each week, and you're welcome to come, and you'll pick up on some of these strategies that can be applied to really any asset class or specific asset. Okay, I think we'll end there. We've run over the hour by a little bit, so I think it's a good time to stop. Maybe on Wednesday, if you guys can make it to the earlier time, we'll do the same idea, but we'll add maybe Fibonacci levels or an indicator along with our support and resistance levels. So we can start to maybe look at how we could add an indicator to go along with these price levels that we were using. Okay, you're welcome, everybody. Any final questions before we end things? All right, great. Thanks for coming. Appreciate all of you being here. And until next time, good luck with your trading. Bye for now.